In this episode, I want to talk about a stock trade that hasn't been going very well for me, especially after the market decline that we saw in the first week of August 2024. And that stock that I'm talking about is Cameco, ticker CCJ. Cameco is a mining company for uranium. I made the mistake of buying shares when it pulled back, and I didn't take any profits near the top. And as a result, I'm now at an unrealized loss of close to $4,000. In this episode, I want to do a little analysis of the things I missed and what went wrong, how this unfolded, and what I plan to do about it as a trader. First, let's talk about how I got into this trade. This stock caught my attention because it was hitting all-time highs in 2022 when many other stocks were down significantly along with the rest of the market. I noticed this trend line here that seemed to be a stable level of support, and as a result, I was buying the dips throughout 2022 and 2023, and I noticed this triangle pattern forming, and I kind of anticipated the breakout that was about to come because it started bumping up. It got really tight into this area, and then it was off to the races. Overall, this was a pretty good trade for me. In early 2024, there was a little bit of a pullback in the price, and I put a tweet out. In my tweet, you could also see some of the buys and sells that I was taking in my TD Ameritrade account. I mainly use my TD Ameritrade account for stocks I'm holding for fundamental reasons I want to hold for the long term, and I tend to use my Interactive Brokers account for shorter term trades where I might want to take profits more quickly. As I showed earlier, the Interactive Brokers account is the one where I sized into heavy, and I'm actually down by quite a bit. Now, one thing that made this stock unusually compelling was that it had a very strong fundamental backstory behind it. I've read many articles about how the uranium supply is tight because of plans for new reactors to go online over the next few years. And as a result, the price of uranium surged significantly. As you could see here on this Fed chart, the price of uranium per pound was under $20 in November of 2016, and then it gradually started increasing in price, going parabolic at the end of 2023 and early 2024, reaching a peak of about $80 a pound. Commodity bull cycles can be very strong, so I thought this one could have the potential to reach or exceed the last time there was a big spike in uranium prices when it reached $136 per pound in June of 2007. When the price of Cameco stock started to dip back here in May, I thought this was another buying opportunity. I started buying more shares, and I actually got a little bit carried away on the size. And it worked out initially because, as you could see here, there was this nice little surge above $50 a share. I thought it was going to go higher than that, but I took my eyes off of it, didn't look at my portfolio for a while, and then it crashed back down. This should have been a very telling sign that something was wrong because it formed a lower high, which is something that's somewhat of a bearish signal. It's especially bad when the price went below $48 a share, breaking this low. It failed to reach a new high, and then it broke the recent low. So it essentially broke the trend that it's been following. But I had so much confidence in my fundamental thesis that I ignored the technical indicators here. Another thing that went wrong is notice how I've been drawing these little downtrend charts. And when you're drawing downtrends, even though they're short term, if the downtrend break is actually working as a trading setup, it should continue to follow through like it did here, like it did here. But that's not what happened. When you have a failed downtrend break, usually what happens is it breaks the recent low like that just before the breakout of the downtrend, and then it starts hugging that downtrend line. And this action right here is, I noticed with this setup, when you're getting into the no bueno zone. They had an earnings release on Wednesday, July 31st, and the stock didn't react very strongly the day of. So I didn't think anything was wrong. I thought it was going to be fine after that earnings release. But sometimes the real sentiment kicks in a day or two after an earnings release, and that tells you what the longer-term direction of the stock is going to be. When we had a really nasty Thursday in the overall market and the S&P 500 fell, we saw Cameco broke this uptrend line, one of the longer-term lines I've been tracking. Usually when a stock has a long running uptrend, when it starts to go parabolic, that uptrend will curl up. And then when that curling up motion kind of breaks down, that is a bad sign. In fact, this is a line that I kind of missed. I could have drawn another one here to this low and see how perfectly this high lines up. So we have this line here for an uptrend touching these recent lows 1, 2, 3 times. And then when it breaks, when it comes back up, it actually touches it sort of mirrors what it was doing on the other end. This is actually a very bearish sign. The earnings release failed to meet analyst expectations, but analysts still remained positive on the overall stock. So at this point, my fundamental thesis might be changing a little bit as well. As I showed you in the Fed chart, uranium had a very strong bull market before. If we back up to the weekly chart on Cameco, you could see back in 2007, the stock hit a strong peak. And this is just kind of how this stock trades. It goes in very strong uptrends, and then it could pull back very harshly. And in this case, we got a little bit of a strong bounce when it pulled back initially, but this kind of made a head and shoulders pattern, actually. And then the banking crash, and then the price kind of settled down, and Cameco went with the price of uranium. So essentially, this turned into a lost decade for Cameco investors. And now we had some changes in the market fundamentally. Price of uranium started going up, price of Cameco goes up with it. It's very tightly correlated to the price of uranium. That also causes me some concern because, as you can see, this parabolic uptrend broke and the price of uranium has settled down to below $70 a pound as of the June 2024 report. In 2007 through 2009, we had a very similar set of circumstances that caused the price of uranium to surge. But what happened? What caused uranium prices to settle down? Well, what happened was that miners picked up their mining capacity and there was just more supply coming online, and it crushed the price of uranium. And that's the problem when you're dealing with a commodity like this, is that it's a commodity. It's very easy for these companies to ramp up production, and it's sort of a self-defeating process in that these companies get very profitable when the price is going up, but all of the work that they put into extracting more resources in anticipation of the price continuing to go up is actually the thing that causes the price to fall back down because it becomes more plentiful. Could that be happening again right now? I think that is within the realm of possibility. Maybe the fundamentals still look great, but there's always this risk of this happening. From my experience dealing with stocks and markets, the price action tells you a lot. So what am I going to do about this trade? It's underwater pretty heavy right now, and something that worries me is that I could actually lose quite a bit, because if this goes back to the original uptrend line that I was tracking, this price could fall all the way down to the low 30s, and I certainly don't want to go there with my shares. So something that I might consider is opening up a hedge with puts, and that will offset any decline that I have. Or I could just accept the loss and try to get out. If we look at the daily RSI indicator, pretty much every other time that RSI got that low, we were actually near a short-term bottom, and it was followed by a little bit of a bounce in the price. And that's what I'm hoping for. Well, hope is a really strong word to use when you're trading, but I am hoping that I get a little bit of a bounce so that I could probably get out with a smaller loss on my shares than I am at right now. And I think there's a good chance that the stock market in general, and Cameco being as oversold as it is, will bounce back some. I don't feel the same way about the long-term picture anymore. I'll keep you updated on this trade, and if you liked it, give me a like and subscribe my channel. See you next time.